Hello, ladies and gentlemen. Hello, hello, hello. All right, ladies and gentlemen, welcome to the Ash Show. Let's start our live stream today. This is basically just a test. I don't think anyone is here, but you know what? This is just me testing it, so let's see what's what. Just, just gonna keep it professional here, just in case someone decides to show up. So yeah, I mean, like the spot here is opening down, which is pretty cool actually. This is pretty good. Our puts should be okay. I will mostly be looking for the retest of the 200 MA here. This is the main thing I'm looking for. Of course, you're always here. What's up, Smoothie? How's it going, man? All right. I mean, like it does seem like the whole like I fixed the lag issues and the echo issues and the sound issues, but I think there is still a lag from when I'm talking all the way up to the like when it actually reaches you guys. I feel like there's at least like a 20-second delay, something like that. I don't know, like because like I'm reading what you're saying, but I feel like there is a delay. Anyway, let's just let's just get this rolling show rolling. Let me just put here the link in the live stream. All right. Yeah, man, going fantastic this morning. I mean, look at this right here, right? My main thing here that I'm looking for is just like a failure of this 200 MA, right? This is the 5 minute chart on the SPY. We have we're in a very bad place here. You know what I mean? Like, we have a gap up and we have a gap down. So yeah, say the time and I'll calculate. The problem with the time thing is that I'm not in the States, so it's going to be different. But I think it's the equivalent of Eastern Standard Time. It should be 9:03, right? So here, I mean, like this is 3 here because I'm in Egypt right now. So it's 3 p.m. So this should be 9:03 55, right? Or 56. I don't know. I'm just gonna leave this open here for you in a little bit, just so you can see like you know what it is. I don't know what time you have there, but like if you're Eastern Standard Time, instead of the instead of 3, it should be 9. So I don't know how much difference this is. But I'm estimating here a 15 to 20 second lag, I guess. So yeah. All right. Whoa, 1 minute delay. Damn, that is a lot. I'll definitely have to look into that and find out like why this is happening. But hey, I mean, at least we got like a lot of the major issues fixed from yesterday. The sound, the choppy camera stuff, right? All this stuff is fixed. So you know, I mean that's something. Baby steps, right? We're gonna get it fixed. Uh, thank you, Kunal. Thank you, my friend. And thank you, Smoothie, for everything that you're doing, man. You really helped out a lot yesterday, and you're still helping out today. So I do owe you a lot for that. Thank you, sir. Okay, let's just go back in the charts and just guys keep in mind there's a 40 to 50-second delay. So let's just keep that in mind here. Should not be the end of the world here analysis wise, but I would not recommend if we do end up taking trades today. I would not recommend taking any of the trades I do just because there will be a delay, right? So yeah, so let's just have a quick look here. Let's starting with the futures. All right, so the futures here in the 5-minute chart does not seem like a lot is happening, right? So if we have a look here at yesterday, we still did not break yesterday's range. We had this level, if you guys remember, I gave you yesterday, 3,770. And as you can see here, we're still struggling with this level here, right? This is, like I said yesterday, this will be a make or break level for the futures. And yeah, so far we've been respecting that. We tried testing this line on the 4th, right, which is yesterday, and we can see bounced off, and this is why we got a continuation of the run yesterday towards the end. And then overnight was slowly started falling down and continued falling down all the way to pre-market, but this is not fully bearish yet, right? I mean, it is bearish, but I would not just jump in inputs right now. This is not what I would do right now. I just wait a little bit, because if you guys look at this, I need a breakdown of this line. This is a major line here, right? And if you look at the SPY or QQQ here, or any of the major one, or any of the major indices, you will see there's a gap down to fill here, right? So for me, it's a very simple and easy, obvious play here, right? We can make some nice money today very easily if we're just patient a little bit. There are two things that can and will 99.9% of course, because the stock market will happen, right? We're gonna get a big move up, test the 50 MA, and then, you know, almost fill the gap. It'll probably go a little bit past the 50 MA, test the 50 MA, fail and go back down, or it's just going to be absolute death. The market is going to open. Is this blue line here is the VWAP. It's just going to reject the VWAP and just start tumbling all the way down, filling this gap down here, right? So this is why yesterday I said, you know, be patient, don't average down all the stuff. If you average down yesterday, you are more red yesterday than you were the day before yesterday, right? It's just like it's pretty clear here, right? If you look at this, it just went up yesterday. This is why we're patient. This is why we didn't need to average down, right? And by the way, yesterday was not just a technical bounce. Yesterday something very, very important happened. We had the jolt up job openings, right? And a lot of people are not onto this yet, but we are, and this is going to help us a lot when it comes when the FMOC meeting comes and the CPI numbers are out. The Fed, Jerome Powell was extremely clear the past couple of meetings that he is looking currently at the job openings more than he's looking at CPI numbers to decide rate hikes, right? This is extremely critical. This is why when the job openings yesterday decreased a lot, right? This is why we had a big run or a continuation of the run, even though we were still extended, right? Because right now the market is starting to a little bit price you know, a Fed U-turn, right? When the Fed U-turns, just so you guys know, this is the end all be all. This is when the market bottoms officially, and this is when we start going up again, right? And we're just going to keep going up again if that happens, right? So this is basically what we're looking at here. Job openings are going to be a lot more important as long as CPI holds still. We need CPI to keep decreasing a little bit, right? Because last CPI report, yeah, it was pretty bad. In comparison to expectations, it was not bad overall. Still compared to previous month, year over year, we were still trending down, right? So that was okay. As long as CPI is trending down, the Fed's Jerome Powell was very clear that he is specifically looking at job openings. And the reason he's looking at job openings more than he's looking at CPI numbers is because he is very afraid that we get a wage price spiral. What that means in simple layman terms is that as long as you know, the job openings are high, people will command a higher salary. People will be asking for more money in order for these jobs to be filled. And when that happens, the companies will have to raise prices because they're increasing the amount of wages that they pay. And if they increase prices, everything becomes more expensive. So employees will ask for more money, and it just becomes, this staircase of just things keeping, of just, increasing, increasing, increasing. And then we get even more inflation, right? So this is what Jerome Powell is very afraid of. This is what he is terrified that would happen. This is why he is mostly looking at job openings and the labor market more than he is looking at the CPI numbers, right? Because the CPI numbers, we kind of know that they're trending now. There is this sort of indication that, like things are, the worst is behind us right now. Commodities prices have been falling off a cliff, right? We also have the supply chain issues in China almost getting sorted. They are in a very bad place right now. They have no other choice except to just, roll with the ball here and just, start, pumping out stuff, improve GDP numbers, improve their economical standing, because they're in a very rough place because of all the issues that they've been having. So they're now forced, they can't just, be on Russia's side 100% completely now. They are forced now, because of their economical situation, to magically fix the supply chain issues that they've been having, right? And this is why you see some, change in tone from Putin, who's now saying, well, let's go back to the negotiation table, let's talk about, ending this war, because he knows China cannot have his back for much longer. He knows India cannot have his back for much longer, right? He has all these issues, and this is, if we get, a lower decent CPI numbers, labor market numbers has been excellent if this keeps on going on. If China keeps on fixing the supply chain issues, Putin perhaps ends the war. We don't need it to actually end. We just need him to say that he is considering it, or that he is, right now in actual meaningful negotiations to end the war. And we get that, right? If that happens, and then that's it. This news comes out, market will start pricing in that the war is over. Europe will start, going back to where it was before, very slowly, obviously, but people will start pricing that in. Oil will crash. Wheat will crash. Commodities will crash overall. Things will start going back to the way they were, right? So we can expect a huge rally if we get a confluence of all these events. Just to keep in mind, and this is something I am currently working on right now, and I'll have a video and a huge post about this. Earnings season is coming up. We have 55 companies, they're major companies that have earnings coming out next month, 30 days from now, right? All through October and the first week of November. Everyone is doing their earnings. Apple, Tesla, Netflix, banks. Next week we have 7 banks, Citi, Morgan Stanley, BlackRock, everyone. We have huge earnings coming up very soon, right? So next month we're going to be very, very busy trying to get rich using earnings, right? So earnings season is going to be extremely, extremely crucial, right? Because if earnings exceed expectation, we have hit bottom. This is it. The one last thing that the most bearish person out there, people like Michael Burry, they were worried about was an earnings recession, right? So if we avoid that, and this is the time now, the next month, this is the most critical month. If we avoid an earnings recession, if earnings come in good, this is bottom. We have been saved. Thank you, God. Thank you, Jesus. And the market bottoms, and we just start blasting off all the way into next year. If earnings do come bad, then yeah, we will hit the expected trajectory by most bears, where probably we fall down on SPX to between 3,500 and 3,300. Then we bottom out from there and we start going up, right? One way or the other, we are very, very close to the bottom here, okay? So that being said, let's go back here and look at our SPY chart. And if we look here, this is excellent, right? We have the 200 MA rejection here, right? So it might and probably will go back for a retest, but it is excellent that before the market opens, we are having a strong hard rejection here from the SPY, right? And again, the level we're looking for here is 371.69 on the SPY. This is what we need. This is what I'm looking for here. I want this level to break. This breaks here. We're going for this huge gap fill right over here, right? And it will fill up very quickly, right? But I personally, I mean, if that happens, personally, what I'm doing is I'm gonna wait for the gap to fill, and I'll just close all my puts, right? Because we might still get another rally. I mean, we're still in a rally. This is basically a correction here. Right? So, like the best case scenario for the bears, in my opinion, is a gap fill. I find it extremely hard and unlikely that we will go down further. But if we do, awesome. And just so you guys keep in mind, we're at 373.25 right now. The gap fills at 366. This is a huge drop, right? We are already down $4.70. That is 1.25%. We're already down that much pre-market, right? It is going to be pretty damn hard for us to fall all the way down to fill the gap. That's what another 373 and 376 here. That's another $7. So that's a total of $11 drop on the SPY today. That brings us to 3.5–4% drop overall on the day. Not impossible. Not that it cannot happen. We've seen it as recently as a few weeks ago. But I'm just saying, like, it is. I wouldn't say unlikely, but it's a little bit hard, right? So what we want to do right now, what we're looking for here right now is hopefully a gap fill or the start of a gap fill. I would be very, 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 I would pay a lot of attention to this specific line here, the 371.69, if we test it, right? If you want to start trimming here, if you got puts towards the end of the day yesterday, you might want to start trimming here at this line, the 371.69. I would not risk it too much. I would not, I would not just keep holding, hoping for the gap fill. I would at least get my core out. I would at least get what I put in. Just, play with house money. Just let things go the way they would. You know what I mean? So this is what I would do here. So we have 14 minutes here left on the till they open, right? So I don't know how many of you guys are watching here, but let's try to drum up some more business on the group here. Let's add everyone here. Let's see. Here you go. Send now. Group chat. Let's just copy this here. Take the link. Copy. Group chat paste. Add everyone. Guys, we are live. Feel free to join. Here we go. And for everyone here that was already with us, thank you guys so much for joining me today. Yeah, I mean, as you guys saw yesterday, like daily improvements, we're gonna be improving, day in, day out. So the stream will get better. I promise you that. The lag will be gone. So yeah, let's just see what some people are saying here. Let's see if we can answer some questions. Well, let's see here what Jay Smooth says. Bought a call yesterday after my puts got nuked. Now, well, okay, see, this is the problem, Jay Smooth. Like, again, when the market runs, twice in the same day, you don't want to be like, I mean, like Jaguar said it yesterday. It is up almost like in combination 5% in 2 days. That was 200 points on the SPX. It is too much. It needs a breather. When the market runs up this much, I would wait for a pullback. I mean, if you guys here have a quick look here, look at this one here. Why was this a good place to buy? Because we got a pullback, right? So we had a pullback here. This is why it was a good place to get some calls, right? But I would not be holding calls for much longer unless we get a major pullback like today. See, today when I close my puts, I'm definitely looking to buy more calls here, right? This is what I'd be looking for, okay? So yeah, I mean, like this is basically the plan here for me today. Again, I see we have some new people joining us. Thank you so much, guys. So yeah, I know you're Jack Sandeep. I know you are. But yeah, so basically the plan here for today is that we're looking for either one of two situations to happen. We're looking for the 371.69 break in order for a gap fill down here all the way to the bottom, where we'll be closing all our puts, and hopefully we'll be looking for some reversal in order for us to get nice entries into calls for a much bigger run in all the way up to 380 plus. The other scenario here would be the retest of the SPY, failing, going back up, breaking the 50 MA, and we continue going up. We already had a decent pullback, so this could be enough on its own if we can go back to 371, consolidate a little bit, and then go up. We don't want to be seeing that. If you start seeing a lot of consolidation here, I will be getting out of all my puts, and I'll just be moving on with my day. I'm going to see what happens. But yeah. Can you elaborate on the indicators that support your theory for today related to the RSI, SMA, and volume? Of course, my man. Of course, I can do that. So RSI is, yeah, sure, it's oversold on the 5 minutes, but you want to look here at the 1 hour. Actually, we are coming down from an overbought RSI, right? You look at that here, all the way up until close yesterday. This was pretty oversold here, right? I mean, you get into official oversold territory above 70, right? 80 is extremely oversold, and we touched that twice, right? So if you look at the 1 hour here, this is a much needed relief. This is a much needed breather here, right? Because we have been running all the way from 356 here all the way up to 378. That is a huge, almost 20 point plus, 23 point move on the SPY. That is a lot, right? So a pullback is needed here. 99% of the times, if we have a gap fill, the start of the gap fill becomes hard resistance. This is definitely a resistance point. So I always have one of my resistance lines, or one of my supports line, right at the beginning of the gap fill, and always right at the end of the gap fill. If you guys have been watching gap fills, usually we get a quick hard bounce the moment it fills the gap fill, right? So this can be a quick call play as well if we do end up going down here. But again, we're a very precarious situation here because we have a gap up to fill and we have a gap down to fill. We don't know how strong this pullback will be. We are still overall bullish, right? We are still overall short-term, very short-term bullish, right? But if we have a quick look here, right, and we still see we are still bearish. Nothing really changed long-term. Long-term, we have here higher high, and right now we are going for a higher high. Lower high, lower high. We're still going for a lower high, right? And we have here lower low, and another lower low, right? So what we're doing right now here is that we are putting in a lower high, confirming the bearish trend, confirming the bearish structure. Nothing really changed here, right? So far, nothing has indicated to me that the trend had changed. In order for me to start getting bullish, I need to see this higher high getting taken out here, right? So for me, you can see here, 1 touch point, 2 touch point, 3 touch point, 4 touch point, 5 touch points. This is very hard resistance here that we're gonna face at 389.5. If we ever get there, if we ever get to that point, right, then yeah, I would say here we'd have equal highs, and we break this, then we officially don't have anymore a bearish structure. It is done, it is over, and yeah, I will definitely change my stance to bullish here. Confirmed bear, of course, confirmed bear, dude. I go with the charts, I let the charts be my guide. If it turns bullish, I will be confirmed bull immediately. I don't care. I'm a trader. I want to make money. You know what I mean? Like, this is all I'm trying to do. And we can see here the trend continuing. Again, lower high here, lower high. Let me just do this with the brush. So it's like here, high, lower high, lower high, lower high, lower high, lower low, lower low, lower low, lower low, lower. It keeps going, right? It's very obvious here. Bearish trend, right? Like, this is all like it is pretty clear here what the market is, the macro trend is, right? So 5 minutes into the open and we're still going down more, which is all good. Again, I will repeat this, guys. Keep an eye on this line. Keep an eye on the 371.69 line. This is extremely important line here. This will be the make or break for us today, right? And if we have a quick look at the 1-day chart here, you can see here still it looks pretty bullish. Sorry about that. It looks here pretty bullish, right? So we have 2 huge candles here, and the next major line of resistance, again, is the same thing on the daily here, 380, right? This is where we start making equal highs. We're pretty far from the 50 MA and the 200 MA, so I would not be looking at those for any sort of resistance. Just one interesting thing, if you guys want to look at this very macro here, if we look at the 1-week chart, guys, look at this here. Look at this. This is the 200 MA on the 1-week chart, right? So one bar is 1 week. Look at this. This is where we absolutely bottomed. We touched the 200 MA on the 1 week chart, and boom, we just go up. So if you have bullish inclinations, I would just suggest that you look at this for one very simple, small reason, right? Look at this here, right? This is a retest. This is the test of the 200 MA bounce. We're gonna go back and retest it. Right? What do we know about our MAs, right? Our MAs love to be tested and retested, right? So this is the first test of the 200 MA here, where it bounced off. We got a hard bounce, but we are likely to go back and retest this, right? And if we guys look back here, this is the sickness drop, right? We can actually say its name here, or we get YouTube spanks us, so we're going to call it the sickness. This is the sickness drop here, and this is a very strong line here. This has held for the longest time. We had a crash here in 2018, held. This was a flash crash, held, dropped. Same thing here. We go all the way back to 2008, and you look at this here. Again, it fell a little bit down here, and boom, goes back up, right? So the 200 MA on the 1 week chart is a major level that we to keep an eye on. Do I think we'll breach it? I do. I think we're gonna breach this line. I think we're gonna go down further. Overall macro trend, I'm still bearish because this was just one bounce, and it went up. I expect a retest on it on the long term. But again, the earnings season, this will be the thing that really ties everything together, right? If we see strong earnings this next week, and we do have, by the way, here 55. Let me just have a look here. Where did I put it? Because I'm working on this. You guys will see this soon. Where did it go? I have a lot of documents open. Oh, here it is. Guys, look at this. I will be doing a full video and a full breakdown. I just started working on this before the video, but look at this. 55 major company earnings this month, right? And of course, I'll paint this a title. We're coming up. On the 12th, we have Pepsi, Citigroup, JP Morgan, Morgan Chase, Wells Fargo, Bank of America, Goldman Sachs, Johnson & Johnson, Netflix, Procter & Gamble, Tesla, AT&T, Philip Morris, Intel, Snapchat, American Express, Verizon, Coca-Cola, General Motors, General Electric, AMD, Google, Microsoft, Spotify, Visa, Boeing, Meta, everyone. This is all in 1 month, by the way. All of this, just 1 month, starting the 12th of October and ends on the 3rd of November. We have 55 major companies doing earnings this upcoming month, right? So it is going to be ginormous for us. We're going to try to play every single one of them, and we're going to make a hell of a lot of money doing this. So yeah, this is what we're looking for here. Market is about to open up here, so let me just quickly go back to my chart here. Let's see what people are saying. Do you use futures in your daily trading? And if yes, maybe a quick glance would help. I do, and I'm waiting for my futures account to get sorted out. But once it does, yeah, I mean, like I day trade futures religiously since I discovered it, and I will be I think like a big part of the day trading that I'll be doing will be futures. I'm just waiting for the platform to sort itself out. They said it should be fixed by today or tomorrow, so I'm still waiting for them. But once that happens, we will be day trading futures daily. But if you have a quick look here, so again, we have here the 50 MA next on the futures. Starting the 3K challenge. This is basically what I'll be doing. Like the 3K challenge will start soon. I'm just waiting for my futures account to be sorted out so we can work all in confluence together, the options and the futures. But quick look here before the market opens on the futures. We have 50 MA next here. This is our next support on the 1 hour chart. The 50 MA right now is 3,741 here. So we can expect a test of the 50 MA, and if that fails, 200 MA next, 200 MA here at the 3,695 level, right? So these are levels to look at here today, throughout the day for the futures. Nice bounce all the way to earnings, then big red as earnings will be less than expected as charge supply. Yeah, I mean, I'm kind of inclined to agree here with Sandeep, with Jaguar in Discord. I'm kind of inclined with him, but I don't know. I think we might get an upset here. I think earnings might surprise us. I need to dive into this more. This is why I'm not done with the video. This is why I'm not discussing this. I just want to show you guys a quick overall, a quick view of what I'm working on. But I think we get a big surprise with the earnings. Maybe. We'll see. I don't know. Like, I still need to research this more. I don't want to be talking out of my butt here. Let's see here. Elena, good morning, everyone. Thank you for the live feed. Ash, you here and haven't chatted much in Discord. You're very welcome, Elena. Welcome to the chat. Welcome, welcome to YouTube. Welcome to the Discord. Like the video. Thank you, Smoothie. You are the best as always. All right, so market is about to open here. We have 1 minute till the open. All right, let's see what the market gives us here. And guys, be very careful if you guys have puts since yesterday. Premium is a killer. I would recommend, you trim a little bit if you can. So, okay, here we have the market open here, and don't rush into anything yet. Let's see what the market does. We have right above us here on the 5-minute chart, the VWAP and the 200 MA as resistance. And right beneath us, we have the 371.69 level as support, right? So if you take any play here in between, you are guessing, right? We don't want that. We want some confirmations here. We want something to tell us what to do, right? So no need to just, no need to just guess. Let's see what happens here. Let's see if the VWAP gets taken out, 200 MA gets taken out, or the 371.69 gets taken out, right? So let's just have a quick look here. Let the market do its thing. No rush here. Let's have a quick look here while the market decides what it's going to do about some other things. Let's have a quick look at the QQQ. QQQ here, pretty much following the same pattern, right? Except the QQQ is very close to filling its gap here. So if the QQQ rejects the VWAP here or the 50 MA and starts filling the gap, you can very much expect the SPY to follow in its footsteps, and the QQQ, the tech sector, will just drag the SPY all the way down here, right? So let's have a quick look at VIX. VIX is a very important one here. We have a gap here to fill, guys. We have a gap here to fill from yesterday, and we are right on the precipice. We are about to start filling that gap here, right? If we can see a gap fill up all the way to 30, right? So if right, and if we see that happen here, that's gonna put a lot more downward pressure on the SPY. So that's 1 point for the bears here. Okay, SPY here is testing the VWAP on 200 MA. This is gonna be very important, guys. This is gonna be important to what happens here next. We want to see if it's gonna break the 200 MA. That and fail. Is it going to test it and fail? Is it going to break through, test the 50 MA and fail? So far, no plays and nothing indicating any sort of moves here. I would not be taking any sort of plays for the moment. Let's have a quick look here. Sorry about that. That's my dog. Very sorry about that. So we have here AMD, Nvidia, pretty red here. The semi sector not very hot today. Tesla, same thing. The EV sector is not super hot today. Tech sector. Netflix. Netflix is a beast, guys. I'm telling you, Netflix is a beast. Everything is red and it's slightly green. I love you, Netflix. No, this is going to be a 10-bagger play hopefully soon. I think earnings. Okay, so let's get back to the SPY here. I have a nice big fat green candle here. Took out the 200 MA for now. Still not a buy signal. We are waiting to see if it's going to retest and fail, if it's going to go up to the 50 MA and fail. Let's just give it a moment here. Wow, the bulls really are in charge today. The bulls, that's a pretty strong opening here by the bulls. Good for them. Right? Okay, we are at the point here of some resistance. If you guys see here, this is some short-term resistance forming here from this low here from the previous day and all the PM chop, right? So this area here, this is an important area I would look at, right? And okay, looks like we're going for the 50 MA here. By the way, the 50 MA is almost at the start of the gap fill, right? So it's nice when things just line up, it's nice when we get some confluence here. So we had the 50 MA here right at the gap fill. So if we take out the 50 MA, we're very likely to start filling the gap. Looking back at 200 MA here, we can see it's again going back for the retest. This is why we do not take entries, right? When something breaks through or falls down, we wait for the retest, right? This is, by the way, if you had a problem with your stops getting taken out, this is why, because you buy here instead of buying here, right, when it breaks down. So you buy here, it goes up all the way here, and your stop gets taken out. This is why your stop gets taken out, right? Because you don't have an ideal entry. And this could reverse, right? I'm not saying it will, I'm just saying this could reverse, right? And this is why your plays, lose money if you do that, right? So patience is key here, right? We can see here it's going back, it's still retesting the 200 MA. We don't know what's going to happen. We don't know if it's going to go up, fill the gap up. We don't know if it's going to go down. Just patience. Just wait here. This is just we're not even 5 minutes in the market. No need to take plays. How many retests do you wait for? Between 2 to 3 usually. It's not a must, right? I'm not looking. I'm not looking for a number of retests to play out. I'm looking for something to happen, right? I'm looking for a confirmation. So if I see like this candle here, right? So it opened above the 200 MA. I'm looking for this candle here to close also above the 200 MA. If this candle closes above the 200 MA, right, then okay, so this is something that's bullish for me. If it takes a few times to do this, if it keeps closing under, above, then yeah, then I would say okay, then this I'll be waiting for more retests. So no specific number of retests here, right? Ideally, if I was going to take a call here, I want this to close above the 200 MA. The ideal perfect entry in a perfect world, in a perfect scenario, is the next candle also opening above the 200 MA, or ideally even closing above 200 MA. But by then, usually in most cases, if you're scalping, the play is already over by then, right? Because it usually runs up. So there is some sort of guessing here. I'm not going to lie. There is some sort of experience comes into play, right? But this is the ideal perfect scenario where I get this candle closes here, and then I will get an entry on the opening of the next candle, right? So this is this is the riskier play here. The second less risky play is that I would get an entry if the second candle after this closes above the 200 MA. Then this will be my ideal entry. Would be a perfect world. But the risk here is that if I wait for the second candle to close as well, the second candle could be closing somewhere up here, and the play is already over, right? So you just get a feel for it with time. If you keep looking for setups like this to happen, if you keep looking for things like this to occur, you just sort of get a feeling for it with time, right? So we still here have. We don't really have any sort of direction here. We are still, again, like this is proving to be hard resistance here so far. We still are unable to break this level. 375.3 here on the SPY. Not really doing much. We're getting some rejection here. The bulls are struggling to push it up past that, because the moment we start pushing past that, the moment we break the 50 MA, where we will fill the gap from the pre-market, which would be a little bullish. I would not be super bullish then, but that's definitely a play. If I see a 50 MA break here, I could scalp calls to fill the gap. But we're seeing here rejection so far. So this candle turned red for a moment there and wants to go down and retest the 200 MA. So there you go. It's retesting it. This is why I always wait for retests. Right? This is why we always go for the retest here. If I bought calls here on the break of the 200 MA and I have a 10 to 20% stop on an option, if it's 0 day or 1 day, my loss would have hit here, right? And I would have been out. This could keep going up, by the way, and my loss, this is why it plays, like it hits your stop and then it goes up. It's not like the market makers or anyone has it out for you. It's just like, you're not waiting for the retest. If I bought calls here, stop would have been hit, and if this reverses and runs now, I would have been I lost money. There we go. We're back under 200 MA, Here you go. Awesome to hear how your gear's starting. Thank you, my friend. My absolute pleasure. This is why I wanted to do live streams, because I feel it's a lot easier to show you rather than tell you. But yeah, I mean, going back to the chart here, we're back under 200 MA, How much room do you typically give to your stop loss, or does it vary? So I spoke about this on Reddit before, but I don't like placing my stops on specific percentages. I like placing them on events. So using the same example that we were discussing here, if I have bought calls here, my stop loss would obviously be a little bit under the 200 MA, right? And if I bought puts on the breakout expecting a failure here, then my stop would be above the 50 MA, right? Because if it takes out the 50 MA, not exactly above it, by the way, I'll give myself some breathing room here, but if it takes out the 50 MA, it's just going to keep going up. I know that. There's a gap here, right? So why extend my losses more? I don't want to do that. And vice versa, right? If I bought puts here, sorry, this was if I bought, calls here and expecting it also as well to reverse, then again, if it breaks the 200 MA and keeps falling down, then, why do I want to extend my losses? I don't need to wait 10, 15%. I know it's going to keep going down. So why risk it, right? So we have here sort of a rejection of the 50 MA here, right? And it went down to retest 200 MA one more time. So again, we're here, we're starting to get, I wouldn't say structure, but we're starting to get some semblance of, things that are what's going to happen here. It is very obvious that, there's a big fight between the bulls and the bear in this area. The bulls are looking for the 50 MA break and continuation. Bears are looking for a break of the this level here, the 373 level, right? So now I have targets. Now I have things that I will look for that will help me judge at least, not necessarily the day, but at least the first hour of the day, how it will go, right? If we keep getting chopped in this area, I expect a very choppy day. I probably will not be playing anything except scalps where I see green and I get out and move on. Or, again, if we break the 50 MA, retest and hold, I'm expecting a bullish day. That means the pullback was enough and we'll just keep going forward. Unlikely, I think. Or we can take out this level here, go for the 371, and, a continuation of a bearish day, right? So this is an inverted hammer here. When we see a wick like this, a wick that touches the 200 MA, and if it closes this way, where it just wicked the 200 MA, and we have a big camp body down below it, that is pretty bearish, right? And vice versa, of course. If this was a candle falling down here, the wick is right here, and we have the body green above the 200 MA, then again, that will be pretty bullish here. So let's see what this candle does here. If the body extends down a little bit, we're looking for a bit of a bigger body here. I don't want to get a doji candle here. A doji candle like this, if it closes this way, is still pretty undecisive. Might even signal a reversal, so we might see it shoot up above the 200 MA if it closes like this. We're hoping that the bears take back control. We're hoping the bears close with a big body here on this candle. That would be an ideal bearish close here. That would be excellent. This is where, if I am a little bit risky, if I feel a little bit adventurous, I would take a starter position on puts. If I have a big body with a wick like this, I might start a position, not my full position. I would start a position right at the open of the next candle here, right? So again, I'm still looking for the same thing here. I'm looking for a close under 200 MA and another candle close under the 200 MA, right? So again, if this closes under 200 MA, we have three scenarios so far. A, it closes as a doji, no play for me here. B, closes the body, a big body under 200 MA. If I'm feeling risky, I would take, I would wait for a little run up on the next candle and then immediately take puts, or maybe just take puts on the next one. Or the third situation is that I would play it safe. I would wait for the next candle to also close under 200 MA, and then I will buy my puts, right? So again, we're still waiting here, and as you guys have seen, why we wait. If I had bought calls or put anywhere here, I would have been extremely chopped up. We would have lost a lot of premiums because, by the way, guys, premiums, the worst time to, absolutely worst time to buy options, the first 30 minutes of the market. First 30 minutes of the market, premiums are extremely elevated. They're extremely high, right? This is why also if you're holding overnight options, the best time to sell them is right at the open, right? So and by the way, if you have the options chain loaded up, you can just look at these numbers and you will find what I'm saying to be true. It is a very interesting actual experiment. If you guys want to look at it, look at the premiums right at the open and just keep watching throughout the day and see how very quickly they killed. Even if it goes your way, premiums at the open extremely elevated, right? So yeah, back to our SPY thing here. I'm still waiting, but back. My point is that you buy calls, you buy puts anywhere here, you would have lost a lot of premium due to the choppiness. Calls would have not made you money. Puts would have not made you money unless you were scalping very quickly in, very quickly out, right? So this is still here a chop zone. Bears, bulls fighting for control here. If this keeps on going, we might be looking at a very a sideways day here, but my gut feeling tells me we're gonna take this level out and we're just gonna keep going down here. Um, Again, just a gut feeling, nothing to support this yet. Uh, this is just I would not trade off gut feelings, but yeah. Again, still looking here. We're obviously forming a range here. This, by the way, guys, the low here and the high here, this is called the opening range, right? So there's a strategy called OBR, opening breakout range, where once you develop an opening range, which is usually you wait for 2 to 3 candles at the open, and then once they far out, you have a range. So in that scenario here, we would do this. We would, yeah, we do Ray here. So yeah, I'd have this line here, and I would have another line here. Sorry about that. I'll draw this line here at the top. Yep. So yeah, and this is what I would look for. This will be my opening range, and now I have some sort of structure, right? Now I have some sort of relevance here. What I'm looking for at the moment is a breakout out of this range, right? As long as I'm in this range, I would not be playing anything except very, very quick scalps, right? And I would be looking for puts under this level here and calls above this level here, right? My 200 MA is 375.9 on my 5-minute chart. What is my 200 MA here? Well, that is a very big difference we have here, J Smooth. Are you sure it's the SPY, not the S? Yeah, you said it was the SPY. Well, let me just walk you through how I do my indicators. Maybe it could be the difference here. I basically go for indicators here, and then I put in moving average, right? And moving average here. I go for the moving average. Oh, sorry about that. We loaded up a few here. X. So, and then I click the settings icon here. And then I go to inputs. Offset is 0, and then the length is 200 MA, and my length here. And it's up to you here to pick. You can pick the EMA or the SMA. I prefer the EMA. And then and then you pick the color that you like. I like red, and click OK. And this is how I set up my 200 MA. Maybe this is why we have a difference. But yeah, I mean, like. So far here, the 200 MA has been tested twice, so I think the number we have here on this chart seems to be correct, but let's see. Yeah, okay, so we got here again. You see our range here, it just hit the bottom of the range and shot up to test the 200 MA here. Again, the 200 MA reminder, guys, this is the line in red, right? And the line that I just canceled right now, by the way, this is when I set it up in front of you. Again, they match. They was on the same thing here. This was the purple one, so if we close it, we get a clearer view. And again, we can see here the red line is 200 MA, and look how it's just the wicks are testing it. So I think the line I have here is correct. Try setting it up my way. Maybe it becomes the same. I don't know. But yeah, we've had this problem before where a lot of people have different 200 MAs here. And so yeah, back to my scenarios that I was talking about. The reason why we wait here, like I said, we wait for the close for the second candle. Let's look at this. What happened here is that if I had bought puts here on the open of this, I'd have been absolutely screwed here. I'd have lost a lot of money, right? So this is why we wait for the, like I said, the best scenario here. What we do is that we wait for the close of the second candle under the 200 MA, which obviously is not happening here, right? We're not seeing this at all. We're seeing here, again, a retest of 200 MA, and so far breaking out above the 200 MA here, right? We have here some resistance that's been forming, and we also have the 50 MA. By the time it gets up to tested, the 50 MA will be right at the resistance here, so we'll have 2 points that if we actually break through, then yeah, we can expect a nice bullish movement here, right? So far, absolute chop, still in the opening range here from the high to the low. This is called the OBR, the opening range. So I'm not really seeing any play that I would take. If you guys want to scalp between these ranges, sure, go for it. I would just recommend very quickly closing out your plays. See a little green, get out. See a little, whether you're buying puts or calls. And because we're literally going sideways right now, we're not seeing any sort of decisive moves at the moment. And yeah, if this keeps going on for the next like 15 minutes or so, I would definitely say that like we're gonna have a very choppy rest of the day here. Um, so let's see again, 200 MA. Look at this. We had a big candle, went up, went back to retest 200 MA. Uh, Nothing substantial here, right? Look at this Meta down a lot. Most of the, I mean, I don't know if you guys heard this yesterday. I was talking about Meta on the live stream, but it was the live stream was very bad. But I said yesterday that out of all the tech stocks, Meta was the most bearish, and we can see here, it's down two and a quarter here percent so far, unbelievably bearish here. It's down a lot in comparison to all the other stocks, comparison to Apple, Amazon. Apple does not seem to be down a lot here. I think Apple is the only thing holding the market at the moment. Yeah, definitely. Apple, but here, look, Apple is about to test its 200 MA here on the 5-minute chart. If Apple tests 200 MA here and rejects it, we can expect a bearish day for Apple and a bearish day for the rest of the market, probably because it seems to be the only thing holding the stock market up so far. If it breaks through and runs up, then of course we can expect SPY. And the reason why this happens is because Apple is the most weighted stock in the market at the moment. It has I think around like 10 to 15% of SPY is Apple. I don't remember the exact numbers here, but yeah. AMC, GME absolutely decimated, down 6.5% each. Crypto not doing well at all. So what we're seeing here in the market is, a healthy pullback. This is all pretty normal here, nothing out of the ordinary. Let's have a quick look at the VIX again, maybe. Yeah, we see here that it went up and almost filled the gap and then went down back again, right? So we have nothing here so far to indicate any sort of movement. I'm not seeing anything that makes me lean one way or the other, right? Let's go back to our SPY here, and again, more chop, more. Again, more retesting and testing of the 200 MA. This is why when Smoothie asked me, what do you look for? How's it going? Like how many retests do you want ideally for an entry? And I said as much as it takes, right? You get days of chop like this. Now, normally this is not, if you have direction, this would not be the case. You not get like 5 million retests like you would here. Ideally, let's have a quick look here at yesterday. Let's take a quick example here. We have, of course, the gift of hindsight here. We know what's going to happen already. But this is actually good practice. Just go back to the previous charts, knowing what direction it will take and trying to see why it went that way right here. So we had a break of the 50 MA here, right? And then it went up. So we had first retest and then huge second retest, third retest, fourth retest, and it was chopping a lot. And then it went down under the VWAP here, and then it went up here again. So first retest is here, it goes up and then retests again and then breaks through and keeps going up, right? So usually it's 1 to 2 as you can see here. So one here and the second here, so break, retest, and then run up again. And this is usually what happens between 2 to 3 is all you need throughout the day. But at the beginning here on a day like this where the trend is mostly bullish, but everyone is scared to get into puts because it's the trend is bullish, has been for the past 2 days, and everyone is also scared to get into calls because we're having a pretty red opening so far. So this is where you get something like this where you see no one stepping up, you see no bears or bulls stepping up here. Look at the volume here so far. At the opening of the day, it's trending down, so the volume is decreasing here. Look at the volume here at the open yesterday. It is much more decisive. We have a bigger volume than we had today. Very clearly bullish, right? Much more decisive, unlike here where it's trending down. So volume is definitely decreasing here as we go throughout the open, and at the same time it's also red green, so very undecisive here. So we're approaching the first half hour of the market here, and zero direction so far here. We have these wicks above and below the 200 MA. So again, hopefully we take out this level here and go down further, take out 371, and hopefully fill the gap here. So I think this was sort of successful first stream here with one issue of the lag. So I will definitely work on fixing the lag here, 40 seconds to 50 seconds here. So this is the next thing. I will make sure that I will take care of it today. I stayed up all day yesterday, all night yesterday, fixing the issues that we had. Once again, I'm very sorry about those. So I think, like we have a good feel for how things we are. So, God willing, starting tomorrow, barring no issues, hopefully we get the Trader8 account up and running. And starting tomorrow, live trading, right? So I think this is a good dry run. I'm pretty happy with it. I don't know if you guys are. Constructive criticism will be super extremely appreciated, whether here or in the Discord. I'm really looking forward, guys, to your guidance to tell me what to do and what not to do here. Like this is how I like doing things. Like we build a very cool and nice community that I'm extremely proud of here in our Discord. So I really like to know, what you guys think. Are you inside the pyramids? You know it, man. This is like the biggest one. This is where my crib is at. I have the basement. I rented out the whole basement. It's where I'm at right now. I have my screen set up in hieroglyphics. So yeah, I mean, like it looks pretty dope. I wish I was in the pyramids actually. Like I had a dream as a kid that I would live in the pyramids. Turns out this is not something you can do, unfortunately. Thanks for the stream. You're great, bro. No, you are great, Smoothie. Thank you so much for your help. Absolute asset, man. Thank you for everything you do. You've been extremely supportive and helpful through this. I really owe you for everything. So yeah, everything looks so far, and I'll be waiting for the rest of the day, guys, for any criticism or any problems that we had other than the lag in the chat. So starting tomorrow, we start live trading. We officially start the 3K challenge tomorrow. We'll be doing options. We will be doing futures. We will be doing crypto. We will be doing penny stocks. We will be doing OTC stocks. We will be doing anything and everything that makes us money. And I would like to remind you, 55 earnings next month. And you better believe we are going to try to play almost all of them, right? This is a once in a quarter opportunity here. So we're going to play every single one of them. And by the way, once we get direction on a few of them, one or two of them, we're going to pretty much know what happens. If one big company fails, we can sort of expect the rest of them to fall in line. And if one company surprises, we can sort of expect all of them to fall in line as well, right? So this is going to be pretty damn exciting. So this is what we're going to do. Again, the market one, just like quick look here before I leave. We're still really chopping here, guys. I would seriously recommend I'm just going to take a picture of this. I'm going to post in Discord too so you have a look at the levels. But these are the levels I'm looking at here. 375 taken out for me to get into calls, and 373 to get taken out to get into puts. I really would recommend against playing in the middle here. As you can see, super choppy. You're going to lose your shirt. So that is it for today. Thank you so much, guys. And I'll be seeing you tomorrow. Ash out. Actually, I'll be seeing you in the Discord. Ash out.